Robert, in your report today, you say there's more year-end data that shows an ongoing momentum for December. Let's start with retail sales. They ended up a little softer in December, but how about the overall holiday season?
Yeah, just a little bit below expectations, up 0.4. That's not a bad number. And if you take the 3 months of the fourth quarter together, we had a pretty solid holiday shopping season. Now, we have to bear in mind that retail sales are not the biggest part of overall consumer spending, but they're a good indicator for overall consumer spending.
Does that have to do with seasonal employment?
Yes, again, it's one of those week-to-week numbers where you can see a lot of variation through the holidays, and the Department of Labor has to do all sorts of seasonal adjustment factors, and sometimes, you know, depending on when Christmas and New Year's and all that fall, that can affect the numbers. And then we also had a spat of pretty cold weather right at the end of the year for much of the country, and that could also be impacting some of these week-to-week numbers. So it's still within the very low range where it was all through 2017, and I don't think that's a cause for concern right now.
How about mortgage applications jumping 8% for the first week of January? What does that mean?
Yeah, another one of those week-to-week numbers that can bounce around, but I think the story there is encouraging because December was fairly weak in terms of mortgage apps. We won't see the home sales numbers here for another few weeks for the month of December, but it's nice to see those mortgage apps tick back up after a week, 3 or 4 week stretch in December.
Robert, let's talk about tax reform. There have now been more than 80 companies announcing that they're going to be increasing wages and giving one-time bonuses, Comerica Bank being one of those companies.
Yep.
What is the overall effect for the economy?
I think it does start to put some upward pressure on wages. That's something that's been very closely followed right now because the Federal Reserve wants to answer that question. You know, how do wage increases impact overall inflation, and do we need to start raising short-term interest rates even more or less based on our inflation expectations? So average hourly earnings, very much in the news. Companies raising their minimum wages, and that of course elevates wages not only for those at the very lowest wage rates for companies, but also for those that are near the bottom, because if you got hired a year ago and maybe you're making just a little bit more than the starting wage, and all of a sudden the starting wage is raised, then you're going to want your wages raised also, and so it elevates the floor for the wage structure of these companies, and it does add to average hourly earnings. And in my view, it's going to start to show more of a pickup in year-over-year gains in average hourly earnings as we go through 2018.